Hello everyone, JC De Guzman for our daily top 5 gainers and top 5 losers analysis for June 26, 2019, Tuesday. This is in preparation for the next trading day on Wednesday. As always, let me remind everyone that the insights that I'm going to share with you are for short-term trading purposes. Okay, so let's begin with the first stock in our list. We have Flea. This stock closed today at 1.87 with the support spotted at 1.68 while the resistance is at 1.91 or 1.9. The ascending price today was accompanied with an impressive bullish volume. It's also good to see that VWAP or the last price closed above the volume weighted average price of 1.84. MACD already registered a golden cross above the signal line. So if you are looking for entries whereby the conditions of our 10 SMA and MACD combination are met, then this is it. Okay, this is it. And the upward momentum of Flea is already very strong, as you can see on the ADX score of 27 points. RSI is relatively near the classical overbought level, so for those who have had Flea, you may want to monitor the price, especially once it draws closer to the resistance at 1.9. It's not far for a significant profit taking to happen near 1.90. Well, that is of course if the traders will translate the RSI once it touches the 80% and above as a selling signal. So monitor Flea closely, especially once it rose closer to 1.9. Okay. For the new entrants, especially the newbies, I suggest that you either that you buy on breakout or you buy near support. Because if you're going to calculate your reward to risk ratio now with the support at 1.68 and the resistance at 1.9, of course, even without doing the arithmetic, you can tell as early as now that you will get a thicker potential loss or potential risk than your potential reward, simply because the proximity or the distance between the last price and the resistance is smaller than the distance between the last price and the support level. So you have a greater potential risk than your potential reward. So this is not in your favor as far as the position of the support and resistance and the closing price as far as their positions are concerned. Let me show you Flea's trade and volume distribution chart. The dominant range here with respect to the closing price of 1.87 is between 1.85 to 1.9. It is in favor of the buyers. Okay, so this is good for those who have had Flea already, but I suggest for those of you who are still planning, if you don't have Flea but are planning to have this in your portfolio, I suggest that you think thrice before you do a test buy. Calculate your reward to risk ratio first. As always, not because I am bullish on the stock, it does not always mean that you should, or it does not always mean that everyone can enter a new position in that stock. There are some bullish signals wherein the trade setup is only good for those who have had the stock, but not for those who are yet to enter a new position for that stock. So in this case of Flea, it's looking good for those who managed to enter a new position on Flea earlier, maybe 1 or 2 weeks ago. But for those who don't have Flea, I suggest that you think thrice, calculate your reward to risk ratio first before you jump into the decision of entering a new trade on Flea. If you would like to top up, let me address this to those who have had Flea. If you would like to top up, make sure that you do it within that dominant range that I've shown you. I am bullish on Flea. Okay. Next, we have Globe. This stock closed today at 2,260. Support is at 1,985 or 1,986. Resistance is at 2,320 pesos per share. The proximity of the last candlestick is closer to the resistance than the support area. So if you're going to calculate your reward to risk ratio as far as the positions of the last candlestick and the support and resistance levels are concerned, I am telling you right now that you're going to get a bigger potential risk than a potential reward. Okay? Nonetheless, I am seeing a perfect bullish alignment among the three simple moving averages of Globe. The upward momentum remains very strong. RSI is somewhat telling us that Globe can still do better or can still go higher than 2,260, perhaps closer to 2,320, if not a little bit higher than that level. And volume is also looking good. The volume weighted average price was at 2,243.33 today, definitely lower than the closing price. So that's a good. Those are good signals for Globe. Now let me show you the trade and volume distribution chart with respect to the closing price of 2,260. The dominant range today. Let me maximize the window. The dominant range today is between 2,244 all the way to 2,260. That's your dominant range in favor of the bulls or the buyers. So for those who have had Globe, it's a lot easier for you to make a decision to top up. But for those who are yet to enter a new position, as again, calculate your reward to risk ratio first. I have mentioned it earlier that you're going to get a bigger potential risk than your potential reward as far as the positions of the last candlestick and our support and resistance levels are concerned. So if you are experienced already when it comes to trading, then you can go ahead and do a test buy. Make sure that you don't go all in. And when you do a test buy, you don't buy at any price. You buy within that dominant range that I've shown you within the first few minutes of trading. But of course, I suggest that you generate a fresh trade and volume distribution chart or analysis maybe after 3 or 5 minutes past the opening bell. And if you don't know how to do that, please post a request in our private clients forum. If you don't know how to do that because you're a new subscriber, I strongly recommend that you go back to our quick start guide. I am bullish on Globe. Next, we have ALLHC. This stock managed to break above the previous resistance at 3.86. It closed today at 3.99. Therefore, it made the 3.86 as its immediate support level. For the psychological resistance, we have 4.86 that is aligned to the 61.8% extension of the up Fibonacci. I'm also seeing a perfect bullish alignment among its three simple moving averages. Therefore, that adds up to my bullish sentiment for this stock. MACD is also moving above the signal line. So if you are looking for stocks that have met the conditions of our 10 SMA and MACD combination, then ALLHC is one of those stocks. The upward momentum remains very strong. RSI is still relatively distant from the classical overbought level, thereby giving this stock more room to test a higher highs, okay, so to speak. So let's take a look at ALLHC's trade and volume distribution chart with respect to its closing price of 3.99. The dominant range today is between 3.91 all the way to 3.99. It's in favor of the buyers. So if you're going to do a test buy or if you're going to top up, make sure that you do it within that range. You have a data-driven reason to do a test buy or to top up on your shares. Like what I always say, whether in our videos or in our private clients forum, it's a lot easier for those who already have the stock to decide to top up, especially when buy signals are present, than those who are yet to enter a new position on the stock. Because those who are yet to enter a new position in any bullish stock must calculate the reward to risk ratio first, must calculate their trailing stop loss first. Unless and until the potential reward is in your favor or you are happy with it, then you should not enter a new position to that stock. Okay? Make sure that the odds are in your favor before you enter a new position in any stock. Alright, nonetheless, my overall sentiment for this stock remains bullish. Okay? Okay, next we're not going to discuss CAB because that's a preferred stock. So I have replaced that with a different one with GSMI. So let's talk about MRC. Okay. MRC closed today at 0.34. Support is at 0.30. Resistance is at 0.37. And MACD is still moving above the signal line. The, the three simple moving averages of MRC are not yet in a perfect bullish position. In fact, it's the exact opposite of that. But the positive DMI is already moving above the negative DMI. However, the upward momentum has not yet reached the very strong category. In other words, the upward momentum is not yet very strong. Perhaps it will reach that point once it breaks above the resistance at 0.37. On the other hand, RSI is still playing inside the neutral level. It seems to me that there's still more room for MRC to test the resistance at 0.37, especially if a towering volume like today's volume appears steadily in the next few days, perhaps until next week. So we are hoping to see some continuities, or we're hoping to see a sustainable volume, green volume bars of this size, if possible, so that MRC will have a bigger force or a stronger force to pierce the resistance at 0.37. Okay, so let me show you MRC's trade and volume distribution chart. With respect to its closing price of 0.34 today, today's dominant range is between 0.34 to 0.345. Still, that's in favor of the buyers. So if you're looking for stocks that have met the conditions of our 10 SMA and MACD combination, then MRC is one of those stocks. So if you're going to do a test buy or to top up, make sure that you do it within that range that I have given you. And if you're going for the new entrants, if you're going to calculate your reward to risk ratio, I think you're going to get, well, as far as my risk tolerance is concerned, I think I'm still quite happy with the reward to risk ratio that I'm going to get by just looking at the position of the last candlestick in proximity to the support and resistance levels. I think this is about 1:1, or yeah, something like that. As far as my experience and risk tolerance are concerned, I think I would grab the opportunity to do a test buy on MRC. But again, that is based on my experience and risk tolerance. We all have different levels of risk tolerance level. We all have different risk tolerance levels. So make sure that you base your final decision with your consult your own risk tolerance as well. Okay, don't just base everything on my overall sentiment and personal recommendations. Make sure that you consult your own circumstances, the purpose for that money. What's your purpose for that money? Make sure that you consider those things. Okay, so nonetheless, I am bullish on MRC. Next, we have GSMI. This stock closed today at 60.9. Support is at 44.5. For the psychological resistance, it's near 79.4. It's aligned to the 61.8% extension of the up Fibonacci. MACD remains moving above the signal line, and the upward momentum remains very strong. It has been very strong for a while already, more than a week or maybe even 2 weeks. Well, not just 2 weeks, but let's check. Since for about for about a month, more than a month already, the upward momentum has been very strong for more than a month already for GSMI. Take a look at this behavior of GSMI as far as its RSI is concerned. RSI has already been playing inside the classical overbought level since when? Since the first week of May. But the ascent in price continues. This is one proof that not because RSI touches the classical overbought level, it doesn't mean it's time to sell. Sometimes you will have to check as well if there's a diminishing or a weakening appetite to buy the stock at a higher price. Now, if the stock registers a green candlestick and the volume bar remains green and higher than its 10-day volume average, that means the buyers, the decided buyers, are still interested to trade the stock at a higher price, which is the case for GSMI since the first week of May. Okay, so take note of that. Again, not because RSI is playing between 80 to 100, it does not mean it's time to sell. Okay? It does not mean it's time to sell. Take a look at the other indicators first. Otherwise, if that's how you think or how you translate RSI, you're going to miss a lot. Okay, you're going to miss a lot if that's how shallow you interpret RSI. Okay? So, I don't see any signs of a weakening appetite to buy GSMI at a higher price. The volume remains higher than the 50% of the stock's 10-day volume average. Let me zoom the volume histogram so you can see that clearly. See that? Now, if you're using First Metrosec Pro, then you can double check on your end. You can also access this chart. Okay? All right, now let me show you again. Resistance, psychological resistance is at 79.4. Take note of that, especially you guys who are just planning to enter a new trade on GSMI. Okay, so if you're going to calculate your reward to risk ratio, support is at 44.5, resistance is at 79.4, last price is at 60.9. I think you're going to get an attractive potential reward than your potential risk. But make sure that upon entry, you already know where your trailing stop loss is. Because sometimes, again and again, no matter how bullish we are, no matter how data-driven is our bullishness for the stock, sometimes the stock acts in contrarian to our bullish sentiment. When that happens, you should be ready and know where to sell, where to cut your losses. Okay? That's part of the game. At least you're not going to sell at a price beyond your tolerable risk. If you're going to sell at a loss, at least you're going to sell within your tolerable risk. The bad thing about selling at a loss is selling beyond your tolerable risk. And that's the thing that I don't want you to experience. That's why I strictly repeat my advice that you calculate your reward to risk ratio, even though sometimes I already sound like a parrot for consistently saying the exact same things over and over again. Anyhow, so I am bullish on GSMI. Next, we have PHEN. So this stock closed today at 2.64. Resistance is at 2.8. Support is at 2.16. Despite the registration of a red candlestick and closing, its closure below the VWAP of 2.69. The last candlestick is still moving above the 10-day simple moving average. On the other hand, MACD is already moving below the signal line. So PHEN is not one of those stocks that have met the conditions of our 10 SMA and MACD combination. So PHEN is no longer in our watch list as far as our 10 SMA and MACD combination is concerned. On the other hand, the positive DMI remains above the signal line, the negative DMI. And it shows here that the upward momentum remains very strong. Why is it the case? Because we're not going to translate these things based on what just happened today. We have to, stretch our chart so we can see the bigger picture. So as you can see here, from a low of 0.88 last December 2018, PHEN is now moving at 2.6 to 2.8. It managed to touch the 2.8 level. That's why the upward momentum remains very strong for PHEN. Besides, it's still moving above the 10-day simple moving average, and I'm still seeing a perfect bullish alignment among its three simple moving averages. It's just that MACD is already moving below the signal line because the price descended. The price descended after it touched the 2.8 level last June 13. So it's a short-term technical correction. For any bullish stock, I prefer technical corrections like this to happen so that the stock can still gather enough momentum to test higher highs. I prefer trading trending stocks that register technical corrections along the way instead of stocks that are consistently registering a price that is higher than the previous trading day. It adds up to the I think for me that adds up to the risk level of the stock. For me, when that's the case, the risk level becomes higher. So I prefer, you know, an organic ascended price, so to speak. Okay. So let me show you PHEN's trade in volume distribution chart as far as its closing price of 2.64 is concerned, which happens to be the intraday low. The dominant range here, well, it's quite a challenge to determine a dominant range because it looks like everything is a dominant range from here. But if we are to select one, I'm going to pick 2.64 to 2.68. Okay. Even without taking a look at the trade in volume distribution chart of PHEN, I do not recommend entering a new position on this stock. Okay, so don't top up yet. Don't enter a new position yet on this stock. Okay, it remains bullish for those who have had PHEN. Hold your position, respect your trailing stop loss, hold your position if the price is still moving above your trailing stop loss. Sell if it's already below your sell once it hits your trailing stop loss. For those who are planning to enter a new position, no, postpone your plan. Consider that plan if and when you see those 4-point criteria becoming present on the chart of PHEN. Okay? I am bullish on PHEN. MWIDE, MWIDE. It closed today at 19 pesos per share. Support is at 18.74. Resistance is at 23 pesos per share. MACD is still moving above the signal line rather. RSI is downward sloping, almost close to its classical oversold level. The positive DMI is already moving below the negative DMI. So even without checking the trade and volume distribution chart, I suggest not to enter a new position on MWIDE. Definitely, I'm not going to give any piece of advice for those who may still have MWIDE because by now, since it hit 23 pesos per share, by now your trailing stop loss should have already been hit. Please don't tell me that you have a risk tolerance percentage of 100% because that's the only way for me to believe that you still have MWIDE. Okay, all right. Okay, now let me show you the trade and volume distribution chart of MWIDE. The dominant range is between 18.9 to 19.2. It's still in favor of the sellers. So it's all the more that you should not hurry in doing a test buy on MWIDE. I am bearish on this stock. Might as well wait. Wait for the stock to touch 18.7 or 18.74. Once the 4-point criteria becomes present, then there's a possibility that traders already think that the price is already too cheap to be ignored. But if the 4-point criteria are still absent even when the price hits 18.7 or below, then that means MWIDE or the traders would want to see MWIDE even lower than 18.74, perhaps closer to 16.55. Okay? Alright, so don't make a decision just based on what you think, feel, or believe. Make sure that everything's data-driven, coupled with your experience and instinct. Of course, don't base everything on instinct. Okay? I am bearish on MWIDE. Next, we have Chelsea. This stock closed today at 8.10. Support is at 7.18. Resistance is at 8.94. MACD is still moving above the signal line. RSI already touched the classical overbought level. The upward momentum remains very strong, but we have witnessed 2 days of 2 days of weakness on the ascent in price of Chelsea. Okay, probably because RSI already hit the classical overbought level, so that's why a technical correction is happening right now. With the height of today's red candlestick, I suggest not to top up yet and not to enter a new position yet. If you have had Chelsea, hold your position if the price is still moving above the trailing stop loss, your trailing stop loss. Otherwise, sell. If you don't have it, then don't have it yet. Add it in your watch list if you are eyeing Chelsea for short-term trading purposes, but do not do a test buy yet. For whatever purposes it may serve, let me show you the Chelsea's trade and volume distribution chart. This chart shows that the dominant range is between 8.05 to 8.12 or 8.13, or we can say 8.15. 8.05 to 8.15. It's in favor of the sellers. I am bearish on Chelsea. Okay, next we have Vulcan. So VUL. Okay, this is not variable unit link, huh? It's Vulcan. So support is at 1.03. That's a major support. The last price is at 1.46. The immediate support is at 1.44. The immediate resistance is at 1.9. The last candlestick is still moving below. It's still moving above the signal, above the 10-day simple moving average, but it's already below the 200-day SMA. Therefore, it remains bullish in the short term, but bearish in the long term on the daily chart. Okay, just to clarify, it's on the daily chart. The upward momentum remains very strong as far as the ADX score of 31 points is concerned, and MACD is still moving above the signal line. So this remains bullish in the eyes of those, to the eyes of those who have had VUL since the third week of May. That was the time when the conditions of our 10 SMA and MACD combination were met. So if you still have VUL, hold your position if the price is still moving above your trailing stop loss, but do not top up yet. I warn you, do not top up yet. The size of the day's volume bar is higher than its 10-day it's higher than its 10-day volume average. So it's more likely for the trend, for the descent in price to continue. So it's up to you also if you would like to preempt your trailing stop loss. Preempting one's trailing stop loss means selling even before the trailing stop loss gets hit. Okay? It's up to you. It's up to you if you'd like to preempt it. You don't have VUL? Don't buy it yet. Let me show you VUL's trade in volume distribution chart. The closing price is at 1.46. Again, it looks like everything is a dominant range. Okay, but if we are to pick a dominant range, that would be between 1.46 to 1.55. Regardless, that's still in favor of the sellers. So don't top up, don't enter a new position yet. Okay, while it remains bullish from on the bigger picture, it remains bullish, but don't top up, don't enter a new position yet. Okay, top up or entertain the idea of doing a test buy if and only if those 4-point criteria become present. All right. So next we have house. So house closed today at 15.48. Support is at 12.88. Resistance is at 16.23. Okay. And it's already moving below the 10-day simple moving average, and MACD is also moving below the signal line. So the conditions of our 10 SMA and MACD combination have already been invalidated in this case. I am also seeing a bearish convergence between the positive and the negative DMI. So avoid house for now. Avoid house for now. There's a possibility for wait for it to test the support near, or might as well wait near 14 to 14.20, within that range. Let's see if there's a possibility for the price to rebound near that level, or maybe close to 12.8 to 13 pesos per share. Okay. Nonetheless, if you manage to catch a house when it hit the if you still have house and it's still trading above your trailing stop loss, then I suggest that you follow your trailing stop loss. Do I see a reason for you to preempt your trailing stop loss? No, I don't see an alarming data-driven basis for you to preempt your trailing stop loss. Okay, that's my assessment. I don't see a data-driven reason for you to preempt your trailing stop loss. If you're going to preempt your trailing stop loss, that should be your own. That should be your decision, or based on your personal decision. Perhaps you need the cash already, but I don't see a data-driven reason to preempt it. If you don't have house, then don't buy it yet. Also, put it into your watch list. Okay. The closing price is at 15.48. The dominant range that I see here is between 15.3 to 15.6. It's closer to the intraday low than the intraday high in favor of the sellers. I am bearish on house, so don't buy, don't test buy, don't top up yet. Okay, so you've heard my technical analysis, overall sentiment, recommendations for these 10 stocks today. I do hope this will help you have a data-driven and profitable experience trading the Philippine stock market tomorrow, Wednesday, June 27. Okay, so those, by the way, those who are currently subscribed for 6 months and 1 year, please check your email. I sent you an email this afternoon. Let me know. I will wait for your reply to that email. Okay, thank you, and have a great day.